Hello and welcome back to Katie's Business Tips. Michael Lapide here once again, talking to you about payroll deductions for your business. Now, as a business owner with employees, it is very, very important that you understand your responsibilities as an employer. It's one of the biggest mistakes. Oh, I'll just hire employees, no problem. And then you find out 6 months later, oh, I had to make deductions and remit to the government and I didn't know. No, make sure you set it up before you get the employee, because one of the worst things you can do is not make your source deductions to the government, which is basically the withholding tax from your employees plus your portions that you have to remit to the government on a regular basis. And if you don't remit those, it is some of the highest penalties and interest you've ever seen with the government, okay? They penalize you through the roof if you don't do this on time. It is the worst because it's considered a trust account. You're just holding that money in trust for the government. They want their money. This is a little different than paying tax, right? One of your major responsibilities, of course, other than those payroll deductions, to make sure you're also paying your employees properly. So following the labor standards, right? Obviously. Labor standards for stat days and whatever your standards are in your contract, sick days and so forth. You must pay salaries, bonus commissions, vacation pays, and tips if applicable, so you cannot hold back pay from employees. That's one of your obligations, clearly. I think that should be known. But and you also make sure that you offer them applicable taxable benefits if they are available. Now, that doesn't have to be the case, but if they are available to other staff on that level, you should be offering it to them. If they're not, they don't have to be. It's not mandatory. You must also withhold and remit those payroll remittances. So we talked about that. That's what I said first. It's one of the priorities that people miss. Make sure you're taking the right deductions off. You have a right software, or you're using a proper company to do your payroll, to take off the right amounts, because you don't want to mess that up either. And then you're remitting that to the government by the deadline, or a day early if you can, just to make sure, right? On time. And the main deductions are the CPP, the EI, and then federal and provincial income tax. Those are your main deductions that you're taking off the checks. And at the end of the day, you're remitting their taxes. You don't have to match their taxes. You're pulling their tax off, but you are matching the CPP, and you're doing 1.4 times EI. So the company is paying a portion of that 1.4 EI and matching the CPP, as well as the individual portion for the employee, and you're putting that all together and remitting it to the CRA. Okay? Now, you should always keep payroll deductions separate when operating the company if possible, but let's be honest, most people move it into their cash flow account. So when you can, set up savings account to put aside your GST, your payroll deductions, even your tax. It's very handy. Otherwise, a lot of times it just gets spent in the cash flow, right? And make sure you know your rates for your taxes if they change, and usually twice a year you're looking at it. If they do change elsewhere, you'll probably know, you'll hear about it, but it's very rare, typically a couple of times a year, and you got to get the updated payroll tables. You can go to Windows, the CRA has a payroll table, so you can go right there, or you can do it in QuickBooks, or you can hire a company. There's various ways to get those proper tables. Now, when it comes down to deductions, one thing you need to know that if you don't remit these, you as a director, if you're a director of your company, could be personally liable for them. The corporate veil does not protect you when it comes to trust accounts of the CRA, which is GST and payroll. You must pay them. Otherwise, companies could just set up, hire employees, hold on all the money, the GST, spend it all, and then close the company and walk away. Obviously, that's not happening. They're going to come after you personally. So it's very important. Okay? And depending on your remittance, it could be monthly, it could be quarterly, depending on the size of your payroll, okay? There's actually some that get so high and so big that they're doing it two times, 4 times even a month, like weekly even, right? Depending how big you get, if you're really big. Now, if you're sole proprietor in a partnership, you could pay yourself a salary, but then you don't have to, right? So keep in mind that a lot of people are like, well, I'm going to pay myself, I'm a sole proprietor, I'm going to pay myself as an employee. You don't need to, right? You're a sole proprietor. So if you have another employee, someone else working for your sole proprietorship, then you would pay him as an employee, and that's important. If you fail to withhold the required amount of deduction, the CRA will subject to a penalty of 10% of the amount required. So not only are you responsible for what you didn't withhold and your portion, plus a 10% penalty. So if you forget to withhold that from the employee, you're going to pay for it. Keep that in mind. This is very important, right? And then the penalty doubles if you're subjected more than once in the same year. So 10% turns into 20%, right? So you don't want to keep being late. It's staggering how much money they can charge you on payroll. If you have any questions, we'd love to hear from you. Do post in the comments below, and we'll see you in the next video.